What happens when the world's political landscape starts to rumble? How does this shakeup echo across the commodities market? Well, it's a bit like a game of chess, with each move prompting a ripple of reactions across the board. In the realm of investing, assets are often categorized into two main groups: safe haven assets and risk assets. Safe haven assets, as the name suggests, are investments that are expected to hold or increase their value during periods of market turbulence. They're the cozy, comforting blanket investors reach for when things get a little chilly in the financial world. Gold, with its timeless allure and inherent value, is often viewed as the quintessential safe haven asset. On the other hand, risk assets are investments that have a significant degree of price volatility. They're the wild cards, the adrenaline junkies of the asset world. Oil and cocoa, with their prices swayed by everything from weather patterns to political unrest, are prime examples of risk assets. As geopolitical tensions rise, we often see a fascinating dance between these two types of assets. Investors seeking stability amidst the storm may flock to safe haven assets like gold. This increased demand can drive up the price of gold futures contracts, illustrating the market's craving for a port in the storm. Meanwhile, risk assets may find themselves out in the cold as investors move towards safer shores. This can result in price declines for commodities like oil and cocoa as the market rebalances away from these riskier ventures. So, what we're seeing in the current geopolitical climate is a real-time chess game in the commodities market. Potential gains in safe haven assets like gold are being counterbalanced by potential losses in riskier assets like oil and cocoa. It's a dynamic, ever-evolving situation that keeps investors on their toes. In summary, geopolitical tensions can stir up significant volatility in the commodities market. This can lead to increased demand for safe haven assets like gold and a corresponding decrease in demand for riskier assets like oil and cocoa. As the geopolitical landscape continues to shift, investors must stay vigilant and adjust their strategies accordingly. This is the fascinating dance of the commodities market, a complex choreography shaped by the winds of global politics.